Hi, I'm Scot Mentzer with Orchard Hill Mortgage, and this is your weekly mortgage update. Okay, let's take a look at the mortgage recap for last week. Mortgage rates were down slightly last week, even though consumer inflation data came in higher than expected. The wholesale inflation rate was down, but that doesn't influence mortgage rates that much. All right, let's take a look at the forecast for this week. Mortgage rates could see some improvement this week if markets continue to bet on the Fed rate cuts to start at the March meeting. Despite labor markets and economic data that points to the Fed keeping policy rates at the current levels, markets believe the Fed will have to start cutting much sooner than expected if it wants to avoid a recession. Rates are unlikely to move higher unless that belief falters. So what's affecting rates this week? We mainly have two things, economic data and the Fed. A holiday shortened weekend brings Wednesday's retail sales data and the Fed's beige book on the economy. Not much other data to worry about this week. The Fed mortgage rates continue to reflect the belief that the Fed will need to cut rates 6 times in 2024. Although Fed officials have been saying it will be less, if markets start to waver in the belief that the Fed will cut rates dramatically this year to avoid a recession, we could see mortgage rates creep higher. Well, that's all I have for this week. Thanks for watching. I'm Scot Mentzer, Orchard Hill Mortgage. This has been another episode of the Weekly Mortgage Update. Hopefully I'll see you again next week.